First of all, the narrative seems to be at the moment that this has been a very good year for both fundraising and doing deals during this pandemic. That's the narrative. Is it true for you, and why?
Yeah. Hi, Rish. Thanks for having me. It's been a very active year for us. When the year started out, we were all very worried and concerned about what COVID was going to mean for our portfolio and just for our business generally. But it's turned out to be an extremely active year for us. There was a lot of dislocation. We've actually closed about $6 billion worth of enterprise value of transactions this year. Our two largest deals were the signing of the take private of Hexaware in India, which is an IT services company, public company that we're taking private, and another similar transaction of a company called Virtusa that we've signed to take private in the US. Both of them are in the IT services space, and they're each about $2 billion transactions. So in addition to that, we've invested in online education this past year. We also did a couple of investments in the financial services sector where there was a lot of fear during the second quarter about what COVID might mean to bank balance sheets. And we felt that prices just overshot and overreacted, particularly in the public side. So we've been busy. I think the underlying point here is that Asia has handled COVID well. And despite the negative sentiment and fear that existed for a period of time, the fact is that China is going to grow this year. It's really the only major economy in the world that is going to grow. And next year probably will grow even much more strongly as a result of the fact that it's basically come out of the downturn first. And I think that's one of the things that's driving people's positive view on why they're confident to put capital to work in these markets.
Jean, the other thing is, as you mentioned at the beginning of your answer, that you were looking at how your investments are going to fare during this pandemic. And as it went on, it became relatively clear, I suppose, that a lot of those, let's say, themes which were there before have accelerated. So you, of course, began to look at the post-COVID world. What did you see there? Of course, it matches with some of the things you just talked about. But what did you see, and how have you, I suppose, rejigged your portfolio to really, I suppose, assimilate that view?
Yeah, that's exactly right. There's been an acceleration of digitalization. I mean, we have to differentiate between the permanent impairment caused by COVID versus the temporary disruptions or temporary earnings setback caused by COVID. And I think the permanent impairment has actually been relatively benign or relatively small. And I think a lot of the credit for that goes to the intervention by the central banks, which was unexpected, and the scale of the intervention was just enormous. And that really drew a line under the worst case scenarios that all of us were fearing in April and in March. When that happened, then we started really coming off of the defensive posture and looking at what are the opportunities. And I think one of the most obvious things coming out of COVID is the increase in digital, the acceleration of digital. And so if you overlay digital with things like healthcare, for example, which is one of our big themes, and we had been looking at this prior to COVID. I mean, we didn't anticipate COVID, obviously, but for example, in 2019, we invested in JD Health, which was basically a conviction bet on the fact that there was going to be more online e-commerce of consumer healthcare products, as well as the potential for regulatory change to allow for online fulfillment of prescriptions, which has transpired. And then on top of that, we've seen a big surge in telemedicine in China as a result of COVID. And that kind of adoption now has resulted in a tremendous growth tailwind for these sorts of businesses. And as you know, JD went public recently, JD Health went public recently and has performed very, very well. The other big theme, I think, generally for us, which underscores the investments I mentioned in the IT services companies like Hexaware and Virtusa, is the idea that there's going to be a tremendous amount of spend now by companies on improving their digital offerings, whether it's a go-to-market strategy, whether it's your back-end integration with all your ERP systems and your front end, or whether it's simply just improving the customer experience or coming up with new channels to market. All of these things are going to require investment in digital, in IT. And the Indian IT services companies, we believe, are very well placed to benefit from this long-term trend.
Okay, you say China, of course, is a destination for some of your investments. Where else are you looking in the region, and why?
Yeah, China has been an active market for us. In addition to JD Health, we've also been investing in one of the leading coding companies that's teaching computer coding to young students in China. So education is another broad theme. We've invested in Southeast Asia, in Vietnam, in the Philippines. We've invested in a company that does a lot of business process outsourcing work called TELUS International, which is a company that's involved in digital support for clients primarily in the technology sector, like Google and Facebook. We've been investing in Japan. We believe that in Japan there's a tremendous amount of corporate divestitures and kind of undermanaged assets that aren't getting the kind of attention that they deserve in terms of management and capital attention. So there's a big opportunity, I think, for private equity firms to come in and become shareholders and really try to revitalize some of these businesses. So it's been a pretty broadly active year across the region, I would say, in almost all geographies.
Jean, we're focusing much more now as well on ESG investing too. How much of a play is that in your portfolio? And I guess particularly looking at the S part of the ESG.
Yeah, I think that you're very right, Juliette, to bring this point up, because it is an important topic on the minds of ourselves and our team and also our investors. I think the ESG initiative is very real, and it has a lot of momentum. First of all, we look at it not just as something that's kind of a good thing to do, but we also view it as a way to mitigate risk and actually generate better returns. Governance is one of the key gaps, I would say, that existed in private equity in Asia historically, and that resulted in underperformance from investments where there were governance lapses. That has really improved. It's improved on the back of the increasing number of buyouts, meaning that we have controlling stakes in these companies now. We're in a position to really have a much more hands-on approach to how these companies are governed. I think on the environmental side, we're also seeing a big opportunity develop there. Not just doing it for altruistic reasons, but there's a big investment opportunity related to electric vehicles, for example, to renewable energy that's taking root in the region in a big way. And in fact, in many ways, the region in China and other parts of the region are leading the world in this direction. So that is a very big theme. I think the other big theme that we're seeing take root in Asia is diversity. And I think diversity is something that we take very seriously and that it's an important part of our thinking.
I just also wanted to quickly touch on the new incoming Biden administration and I guess geopolitics and how that plays into your investment thesis too.
Yeah. The geopolitical situation has been one of the biggest issues on our minds for the last 4 years, and it's really gotten worse each year. And it's not something that's easy to resolve, and I don't think that it is something that will revert to the way it was prior to the last administration in the U.S., although I'm optimistic that the new administration will be more engaged and will have a more multilateral approach to China and to the region and to the world. We're seeing already the appointments that they're making of senior diplomatic people in the different positions, all having a lot of experience in working with China and working with multilateral agencies historically. And I think this bodes well for a kind of a better dialogue and hopefully moving towards more of a win-win type of discussion. It's evident that China and the United States are going to continue to be global competitors, both ideologically as well as economically. But I don't think the scenario that we see as the highest probability scenario is one of conflict. I think it's one of being very interdependent and one of learning how to work together better and really helping each other to develop. And so we see the investment environment becoming a little bit more clear than it has been in the last few years with regards to geopolitics in the region.